Hey, what's up guys? John here. Why are nearly all billionaires, CEOs, and executives unloading shares right now?
A growing cohort of billionaires and CEOs are unloading stock and at an increasing pace.
Is it because the economy is going to be in a soft spot going forward, potentially walk into a recession or a depression, and they want to liquidate at the height of the market? Possibly, but I think it's going to be because of all these new sweeping laws that are going to come and impact nearly every single business owner, both small and large, and they believe that American consumers aren't going to have the money to be able to withstand these newfound costs. Many consumers are going to be walking into a very, very challenging position, and they're going to be closing up their businesses, and these large companies are going to be less profitable because of this massive wealth transfer. It's not an opinion, it's a fact. These are the laws that are in place right now that nobody knows about. So if you're an entrepreneur, business owner, real estate investor, you have goals to get rich in 2024, 2025, pay attention to what's actually happening so you can put your money in the right spot. In this video, I'm going to break it down and show you word for word exactly what's coming. I'm going to show you the executives that are selling as well and connect the dots for you so you can make smart decisions. Please hit the like button. When you hit the like button, YouTube will share this content to educate the people about what's going on in America's economy. And if I can fix your credit, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free strategy session for Monday. Take a look at this. So first, Dow Jones. In March of 2020, it was 19,173. Now it has increased to 38,000. It's increased 100% over the last, call it 3.5, almost 4 years, right? So you're looking at this situation, and then now let's kind of connect the dots here. So Discover's charge-offs. The earnings report showed Discover's revenue is up 17% year over year, driven by strong asset growth. However, the company's provision for credit losses rose by $929 million, reflecting a $297 million increase in reserve build and a $631 million increase in net charge-offs. The report showed 30-day delinquency rates for credit cards at 3.41%, up from 2.86% in the quarter and 2.11% during the third quarter of 2022. December, Discover reported a Securities and Exchange Commission filing that its delinquency rate climbed from 2.86% to 2.86% in June to 3% in July. Now, then you look at this. Discover CFO sells nearly all of his company stock. How much is nearly all? Are they exaggerating? No. He sold 99%. He liquidated 99% of his stock holdings 2 days ago, January 26th. Then you have the CEO, Discover, steps down, right? He resigns. Then the CEO of Visa liquidated 8,150 shares, right? Which, is a couple $1 million, not a big deal. But then you have JP Morgan Chase CEO Jamie Dimon liquidating 1 million shares. And, it's about 140 million, closer to 141 million worth of overall stock liquidating, all basically within a 90-day window. A lot of this is happening. Then you have Jeff Bezos at the height of the market, Amazon stock. He sold 10 billion on the first round, then another 2.5 billion. And then he sold more. He sold another 240 million later. Mackenzie Scott selling $10 billion. Why am I telling you all this? I'm telling you this because when do you ever see the wealthiest people in the room doing all the same thing and them being wrong, right? Oh, never. You never see that. Even during the 2008, 2009 crash, even dot-com bubble, you look at a lot of these periods, a lot of the wealthy people got richer. And so this is how they're going to get a lot richer. And a lot of Americans just simply aren't connecting the dots. They think, this will never happen. It's America. It's never going to happen. So Discover stock here, right? So just showing you, this is basically all-time highs on almost all of these stocks. And Airbnb CEO Brian Chesky unloading shares. A lot of executives in Airbnb also selling stock. Zuckerberg selling $500 million worth of stock over the last 90 days. And so you see these layoffs. The layoffs are all in anticipation of these new laws. That's what it is. These new laws are going to change how people are allowed to do business. How much everything is going to cost, everything is going to change. So I'm going to show you some of these companies that are issuing these layoffs to just show you how serious this movement is towards this new economy. So the full list of major U.S. companies slashing staff this year. And you're talking some of the biggest companies. You have Google, right? You have Discord laying off 170 employees, Citi laying off 20,000. You have Amazon laying off a few hundred people, not a big deal. Amazon also on Twitch announced some layoffs. Nike, $2 billion cost-cutting plan. Intel cutting jobs. BlackRock cutting 3% of staff. Runway, 10%. Like all these companies, eBay cutting 1,000 jobs. Microsoft, 1,900. Salesforce, 70. You get the point. Right? So you're seeing all these layoffs, And then it just continues. Twitch, Hasbro, Spotify, Levi, Xerox, all of these companies laying off thousands and thousands and thousands of employees all at the same time. All at a time when people say, hey, the stock market is in an all-time high. People that think that we're going to have some type of recession or problem in the economy, those people are crash bros. Or those people, they're a bear. This is what's actually happening. So you have this $2 trillion corporate debt wall that's incoming, but this is where we're actually moving. So you look at this headline. This footprint of homegrown foods 5 times greater than those grown eventually. So what you're going to start to see is all of the conversation that was had over the last 3 years, 4 years, where everything was about about trusting this. Well, now urban farming has this shockingly high cost. Here's how they can bring it down. And this situation, everything is going to be moving towards this. So businesses that are, conducting business, they're going to be looking really, really closely at the impact of the existence of that business. Whether it be shipping, distribution, everything is going to come down to this. And so when you start to see how, look at this, it's time to limit how often we can go, right? This is going to be the answer. So what I believe is going to be happening here, and it even says it right here, it says, considering how the U.S. can meet these targets, one becomes clear. We need this price, right? So you're going to need a price on this. So what I believe is going to be happening, and you've seen this. I mean, this has 1.2 million views. It came out. I'll refresh the page. It probably has 1.3 now, 1.5 million, right? And I refreshed this page 10 minutes ago. So 1.5 million views. These activists threw soup on a Mona Lisa. So when you start to see all of this happening, what you're going to start to see here is obvious moves. Billionaires buying up a lot of land, buying infrastructure. They're hedging themselves against a significant downside in the economy, and they're putting money in a place to where they're going to be able to buy these offsets ahead of everybody else because they're going to be required for a lot of businesses. I mean, look at this. You have, Bill just dominating 270,000 acres. Absolutely dominating. You have JP Morgan Chase bought a massive forest, not just to make money, it's because it's a $200 million investment for this removal. It says the investment will enable the bank to remove the equivalent of these emissions and otherwise hard to abate directly from operations in the next 6 years, right? So they're buying this for their business. That's what they are doing. They're buying it for their business. And when you start to see a lot of, what other companies are doing, like Stripe, Alphabet, right, and others spend nearly $1 billion on this, you're going to start to see that this is going to become the new normal. So people think that we're in the new normal. No. When we start to see this, like look at Amazon, for example. Amazon's a really, really good example of this. Some people say, hey, I have an e-commerce business, I'm in drop shipping, or I have this other business. Amazon, this stress test coming for Amazon sellers. We scroll all the way down here, and it says right here, there's basically it's 3 scope. So there's 3 scope. And I'm not going to read the whole article, but it says the retail giant made it clear that there are many consequences for partners who don't measure up. We will continue to look for suppliers to help us achieve our decarbonization vision as we select partners for business opportunities. Amazon spokesperson declined to comment. In the end, it comes down to suppliers choosing what works for their business. The suppliers themselves and the suppliers of suppliers have to come to their own independent decision on how they're going to approach this. And so when you start to look at this, it's really, really shocking. So how it works is amid ongoing fears, higher interest rates, and cutting into the sources of capital, signs of weaker consumer demand, and labor market challenges, small businesses have to focus on employees and the bottom line. When asked what issues matter most, nearly 40% of them said job and economy, 10% said environment. Yet, ready or not, suppliers big and small will have to step up soon. This is coming. The procurement arm of the business community is reaching out to the supply chains and starting to ask more pointed questions. In addition to the pressure from investors and politicians, another reason big companies will be looking farther down the supply chain is because they are currently coming short on emission reduction goals. Amid the boom in consumer demand and global growth post-pandemic, many of the world's large corporations are producing more of these emissions, right? So this is going to be coming. These mandates, right? And they have to disclose scope 1, 2, and 3. So what's going to happen? This is what's going to happen. We're going to walk into this energy transition. It is likely not going to be very cheap, But some people may say it's a really, really good thing. Maybe. So we're going to be walking into this transition, and this transition is likely going to be pushed onto the consumer. It's going to be pushed onto the business owner. There's going to be newfound cost. So the aspiring entrepreneur, business owner, someone that has really, really big goals should be really paying attention to a lot of these laws. They should be stacking as much cash as they possibly can. They should be borrowing money if it's going to make them more money, not borrowing money just to have debt to increase lifestyle. Put themselves in a really, really strong position so they can pivot and move during the pretty crazy times. Because to me, when you see all the wealthy selling tons of stock, you start to see what Amazon's doing. You start to see all of these things moving in the economy and in the world. You can see very clearly that what we're in right now is not going to remain. We're not going to just see the stock market, sit here for a while. I believe what we're going to start to see instead is a massive transfer in assets of wealth when this starts to take place. When people start to realize that, hey, this situation that we're in is about to ramp up over the next year or two, you're going to start to see real panic. That's what you're going to start to see. What do you think about this entire situation? Do you think inflation is going to get a lot worse? Do you think we're going to start seeing consumers being pushed off the financial cliff's edge, and then we're going to start to see corporations investing heavily into infrastructure and really growing their wealth and taking advantage of what I think is going to be the greatest wealth transfer in American history? If you're a business owner, you need to pay attention to this. If you're just an American, maybe you're not a business owner, you're going to start being able to buy these offsets. So if you're going to want to travel, maybe you want to go somewhere and you're like, hey, I want to go to Amalfi Coast, or I want to do something, you might need to buy somebody else's credits to be able to do that trip. That trip might be, might right now be $2-3 grand. You might be able to do that trip for a week. But down the road, it might be 10 grand, it might be 12 grand. So take into consideration that the cost of everything is actually going to ramp up in a very, very, very big way. So if you're in a comfortable salary right now, realize that you're going to want to increase that dramatically to be able to buy yourself freedom. Because at the end of the day, money buys options, and options is really the new wealth in 2024 and on. What do you think about this entire situation? Drop below. Let's have a conversation about it. And if you'd like to fix your credit to position yourself for funding, to really put yourself in the best position, if you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free strategy session. Catch you next video.